We have a lot to get into today. We all see that the S&P is somewhat flattish coming into this area. And I just want to say something. It looks a little different than it is, meaning when we start really diving into what's going on with commodities and Bitcoin, some of these names like Tesla, what's happening with software, and we're looking at this space and saying, oh, it's exactly the same. We've been here before. It's very different than what it's been like before. And I think that's really what we should focus on today. What is the difference between when we were here and these areas of interest on the Nasdaq? What's really changed? What sectors are getting crushed? Which ones actually look like they're about to ready to explode? There's a huge dynamic that's changing, and I just want to jump into it. As always, subscribe to the channel, click all notifications. Don't have time for the fancy little memes today. Let's get to it. Now, I want to take a long outlook here, meaning let's look at things from a zoomed out perspective. When in doubt, zoom out. And we're just looking at the weekly Nasdaq. That's all this is. Below is something called PPO. And anyone can pull this up for themselves, and you'll see that it's very similar to a lot of other metrics, but I like this. And what I'm going to do here, because I don't really use it that often, but I'm going to make this super obvious. And let me just go here, and as I stated before, deal with the voice, because it's a cold, and it is going away. But you can see the flips a lot cleaner by doing it this way, and you can see the histograms too. But I find that the histograms, in this sense, they're going to kind of get in the way. So what I tend to do with this stuff is just, get rid of the histogram. And then the other thing that we might want to do, maybe we make that zero line just a little bit bigger. I think that that's an easier way to do this. So let's do it this way. Well, it looks like I either get all or none, huh? So we're going to take none. If they're going to give me an option, we're going to take none. And then what we're going to do is just go here ourselves and draw our own. And there we go. So now we have our zero line. It's a little bit cleaner. And so what that's going to do is it's just going to point out what I think is very, very obvious. Now, if we go back and take a look at the Nasdaq, and we can go all the way back to about 95. And what we want to do is look at the zero line and look at what happens when it crosses on a PPO basis, meaning if you hit it and then you cross over. And it's super easy to see, but what we'll do is I'll go here and I'll just click this keep drawing button. And the reason I'm saying some of this stuff that I'm doing at the same time is because people keep asking me how I'm doing, what I'm doing, and if I could just make tutorial videos. And the answer is someday, but I have a lot going on. So the idea that I'm going to just say sure and then they're not going to happen is probably more realistic. So let's just start working them in a little bit better, and here as well. So if we went back to 2020 and we look through these little arrows in here and we just look at those areas, we can all see that when you hit the zero and came back over, that became an area to buy for a fairly decent period of time. And obviously if you're cracking that, it's not the best. And we could see that that's what the great financial crisis looks like. You know, it's so funny whenever you're in these like great financial crisis, or it's the pandemic and it's the end, and this time it's really, really the end. And you look at something like this, you start to feel so foolish. And that's what it takes. Just takes the slings and arrows to keep buying the dips after a while. People are like, why do you just, why didn't you not care? 25 years of just getting kicked in the teeth. That's why. So, but when you look at these levels, like, oh, okay, that's something I'd want to pay attention to. Oh, look, we flipped in February 23. How'd that work out for us? Pretty well. And here we are again. But everyone's going to tell you, no, this time it's different. Some people just aren't happy people. And there's not really much more to say about it than that. It's what you're looking to do is you're looking to find something that tells you what's actually going on out there. And I make jokes about that, but it's kind of true. Like if you want to find something negative on the market, you're going to find it. If you want to find something positive on the market, you're going to find it. That's why I like technical analysis so much, because it is what it is. Here it is. And this is the hand that we're dealt. What do you want to do with it? Now, there's some things here that aren't great. In regards to the NDX, and I want to get into the advanced decline line here in a second, and I think I know the reason why it's happening, and I do want to spend some time on this because I think I can add real value today with this. But if I look at this level, is this something that I need to be getting out of on the long term? No, it's not even remotely close. If we got out at this level because, we're definitely not going to flip here, what happened? Well, nothing good. I got out before the big move. So when you see something that works repeatedly over and over again for let's say, the past 20, 25 years, because that's really all the data that they're going to give me on it, you might just want to pay attention to it. And this isn't something like, I have to go long zero dated options on Monday because I watched this dude on YouTube and he pointed at this thing. No, it's just telling you the weekly long-term trend is intact. And I'm going to give you some other examples of this today. But I see a lot of noise. And some of that noise in my opinion, may be warranted because of what you saw going on with software on Thursday and Friday. And that does get my antenna up, and we're going to get into it. In front of you is the advanced decline line of the Nasdaq 100. And we can see pretty much how it's just following line by line by line, which is exactly what it's supposed to do. When we bounce, it bounces. When this goes, that goes. And so that always is a great tell for us, meaning is the advanced decline following what the Nasdaq's doing? And as long as it is, you're usually in fairly good shape. And even in here, when you can see October 23, up, and then we come back down, we're still moving higher. So it's telling you on this bounce, like, hey, you might have a problem, but then it resolves itself. And it's like, oh no, it's on like Donkey Kong. And that gives us a great opportunity to get involved. Very similar to here, you can see it. But there are some things going on, and I want to just show you this on the daily first. So when you have these little drops, as long as they're following through, you're fine. But you can see in here how all of a sudden it just starts decaying, and then it bottoms, and then it starts going up. And while it's going up, the market's not really following. This is always a great opportunity to get involved. Now, I'll show you what I mean by this on the hourly, just so you can kind of understand. You have a line here, that line pops over, and then we start rolling. And this is actually rolling down on an hourly basis. I have an hourly set up for a second. On an hourly basis, while we're actually going higher. So you would know that that's probably not going to last, right? And then you can obviously see how it starts to fall apart. And then, of course, you have a little bit of a bounce, but then you start to fall apart again. So even though you're going higher, you're seeing the issue. But once you start to turn, you're like, oh, okay, this might have a shot of working because the advanced decline is starting to move in tandem with it. And you can go into smaller time frames or larger time frames, but I would suggest that you really don't want to go past 15 minutes. But what I want to do, again, is stick with today's theme, which is when in doubt, zoom out. So we're going to take a look at the NDX, right? This is just the 100, and this is the ADL of that. So when I pull this back, and you can see it for yourself, here's the high, and here's the high, here's a lower high, and there's the high. So this is what we would call a divergence, and it's a negative divergence. And the reason for this divergence, in my opinion, let's just hide this for a second so that you can see exactly what I'm talking about here. And if you ever want to hide something, you just go up here to these three little bars, and then you just kind of click show or high, and that's it. That's all. Draw in this bad boy. And that would be Captain Obvious. Everyone would see that and go, well, that's not great. And I agree, it's not. I think there's a reason behind this. I think that the reason that you're seeing this movement from June on into July, I think there's a reason. And I think there's a reason why it's getting worse. But you need to be aware of this because this is really the first sign. When the ADL starts to go on the NDX, it's not great. So you don't really want to start seeing lower lows. Like in other words, if this starts decaying and starts getting worse and you're in the camp like, hey, canary in the coal mine, this is an issue. And now what's important about this is let's just get to it. Well, you told me here, everything's great. Everything's great until it's not. And that's the thing about technical analysis. And the other thing is, just because I'm flipping here doesn't mean I can't go sideways for a period of time or have 1 or 2 bad weeks before I regroup. You have to understand the time frame in which you're trading. To me, what's bothersome about this is I don't really care that it's been since December 30th. We've had all the liberation that we can take and all the winning that we could possibly take, right? And so now what we're doing is we're working our way through all our liberation and winning, and now we're getting back to the ground level. But some of the uncertainties out there. And I also think that you have some uncertainty dealing with some of the winners. And this is really interesting because when I show you the high-low areas, it's showing a completely different thing. But watch this. Now, to start with, Amazon, and that's where our focal point's going to be here, and it's going to all tie together. But Amazon first day sales dive, 41% retail consultants report. Momentum Commerce reports the figures for Tuesday, July 8th. Momentum founder saying that the sales numbers for last year's event could still surpass those of last year's shorter one. Nothing like having a longer time frame for your sale and it coming in the same amount of money or less than the prior year. Sounds like a real issue, in my opinion. Reached payments, Amazon spokesperson said, typical of statements made by third parties, we don't have access to data or are highly inaccurate. What are you going to say? It's going poorly. She attributed the first day sales to consumers putting items in their shopping carts, but holding off on completing the purchase in case better deals come along. There's nothing like that, right? We all put stuff in the shopping cart and then just spend a day before we hit the button, I guess. Okay, let's go with that. Amazon stock gets price target hike as analyst sees AI boosting cloud growth. So on the 11th, despite what just happened to the sales side of the business, they're getting an upgrade. All eyes this week are on Amazon's massive e-commerce business Prime Day deals. But analysts Morgan Stanley raised their price target largely because of different side of the tech giant's business, its profit-driving cloud division. A team of Morgan Stanley analysts, Brian blah, blah, blah. Overweight, top pick, Amazon stock. Okay, so sales are down, but you're saying the stock's going 35% higher. Now, most people were confused by this, but let's take a look at what they're actually talking about. And what we find is AWS is launching an AI agent marketplace next week with Anthropic as a partner. So let's just take a step back and talk about what an AI agent is just for a second. We're not going to get too deep down the weeds, but just understand AWS is launching an AI agent marketplace next week with Anthropic as a partner. This is from a research report. For those that don't know, we go back and we always just go right back to the stool, don't we? It's very, very simple. We have a macro, we have the fundamental side of the market, and we have the technical side of the market, and then we have the top of that. And what you need, and I know that's really drawn poorly, but it is what it is. Macro tells us what's going on, fundamentals tells us who's affected by it, technicals tell us when. What, who, when, and then up here, sometimes if we're at the bar, we're leaning on the front of it. Sometimes we're leaning on the back of it. Sometimes technical takes the wheel, and sometimes macro takes the wheel. So keep this in mind as we go forward. But AI agent marketplace next week, Anthropic. Why do you care about this? Like, why is it such a big deal? But the marketplace will take place at the summit in New York City, July 15th. I wonder if you should watch Amazon this week. Maybe. There you go. Something to put in your calendar. Two people familiar with the development told TechCrunch AWS and Anthropic did not respond to requests for comments. And again, super quick, but I think it's important to know this stuff because if you can follow where the puck's going, you're better off than where the puck is. AI agents definition, what it is and why it matters. It's AI intelligence becoming more integrated every day, business technology, new concept, the AI agent. Unlike static automation tools, simple chatbots, dynamic, goal-driven system capable of making decisions using tools, executing often independently. What does this have to do with the AD line? We're getting there. An AI agent is a software-based autonomous system perceived in the environment to make decisions based on input and take action. Yay. It combines artificial intelligence, natural language, act intelligently. Okay. It is a digital worker that thinks and acts. Now, I'm fortunate enough to have people in the community that are like specialists in their fields. One of them actually said this to me in December or January that software is in a lot of trouble. And you can see this from Klarna. And what Klarna CEO is saying in here is that the company is going to end its relationship with Salesforce and Workday. And they did this in January, driven by AI initiatives. This news from Klarna should have every enterprise SaaS company shaking their boots. Internal team using AI can replace an internal team using AI can replicate over 20 years of work customization from Salesforce and Workday to the extent the company doesn't feel the need to pay for those tools anymore. Everything we know about stickiness and durability of enterprise software needs to be rethought in the light of AI. I'm not going to butcher this gentleman's name. Former Coinbase board member and early stage investor. I mean, obviously he's going to have his own bias. Klarna's not alone. Interview with AIM, Harnett, Rabbit AI revealed it's partnering with the University of California to create AI-powered tutors on their online programs. The university is up and move away from more SaaS providers. Okay, who's most at risk? So this is just a very simple guide that I got off of ChatGPT and I wanted to share with you. And it warns these are the three most at-risk categories. But mid-market software firms are being squeezed by nimble AI startups and tech giants accelerating AI investment. 100 plus mid-market software firms. Example, vertical SaaS or digital single domain apps, marketing tools, boutique CRMs are vulnerable if AI agents can replicate them, core tasks like scheduling or content creation. All right, so now you have Amazon overlaying Anthropic and saying that, by the way, you get this as a possible service for you if you use our cloud system. Do you think that this is going to be a problem? And you can see traditional enterprise behemoths, unwieldy legacy systems, Salesforce, Workday, Oracle, pressure internal teams, Klarna already ditching them in favor of in-house AI agents. So then we bring it back full circle. What does this have to do with the advanced decline line? I would argue that the majority of the movement that you're seeing in the weakness in here is coming from really just one sector. If we look here, we can see that this tops out right around that early June date. At the same time, if we just take a look at cloud, which is just software, obviously cloud computing, and we mark this off and we get the same June 2nd date, what we'll note is that's the time that cloud actually stopped moving higher. But you started seeing other stocks start hitting new highs. We're getting there. We're going to get to that. What I think is most important about this, then we just kind of mark that off and look at it from a daily perspective. And it's so obvious now, right? Like, isn't technical analysis so obvious after the fact? But look where we are. Like, that's a technical sell right there. I use a 12, a 22, a 55. You should use what you're comfortable with. But there you are, and you're closing right below the 55-day moving average. Well, I've seen good before. It doesn't look like that. And what's happening here is people are starting to realize that AI is going to start eating into this business. So when we saw these sales the other day, and this is really important to get, but when we start seeing like Palo Alto Networks or Crowd, and we start seeing these names start to come in, it doesn't matter because they throw everything out at once. People are going to say, well, my company's okay. It's not. It doesn't matter. When they want out, they're going to get out of all of them. It's just the way it is. They're actually going to just compress the PE of all software companies. And that's what's going on here. Is it going to present an opportunity later to get involved? In the right ones, yes. But even Oracle, which I love, it's at jeopardy right now. They're all at jeopardy because people are going to associate the PE of this, and they're going to say the PE of these is way too high. We're way too up there. These things are at risk. And how obvious is this going to become when you go into Amazon's July 15th date this week? Probably pretty obvious. And we can see that if you really want to see something like crazy, here's June, and just look at what's happening since then. I mean, it's actually the exact opposite trade of what Cloud's doing since it started lifting. And it's super easy to see this. See, Amazon's not moving because of Prime Day. Amazon's moving because they're basically going to replace software at pretty much of these companies. Like, why wouldn't you want this AI agent? Why wouldn't you want this marketplace with Anthropic? Like, it would just make so much sense to replace it. It's a one-stop shop. Amazon doesn't care if you're using CRM or Workday. And look at how this is playing out. This is what's happening. And when people look at this, go, well, you're making a comparison. Yeah, I am. I am making a comparison, and I'm telling you, this is exactly what's happening. You don't have to believe it. That's why there's a market. But when you start looking at how this is playing out, and what I really liked, and I saw it on Thursday and Friday, was I saw people in the community just start connecting the dots. See, the thing about it is I can put this whole picture together, and it's why I love having a community. I don't know all the nuances of everything. I just don't. So when I've got 40 different countries in there and experts in there and software and semis and all this space, they can say, oh, by the way, X, Y, and Z. Stuff that I don't know. I don't know why cybersecurity would be hit harder on this. Like, I don't answer that. I understand why CRM would be hit. I understand why Workday is probably toast. Like, these are just perma shorts right now. And that's how I view it. And I don't think that the stocks are disagreeing with me. To me, it's very clear that this stuff's heading back to these lows. How long that takes remains to be seen. And something like now, when this broke, we had one guy in the room that was explaining why he was short this. It's up like $25 in a day. So we're starting to see this, and we're starting to see software roll over. And I think that this is really important to have spent that time to connect the dots, because instead of us looking at this and saying, oh, the market's rolling over, no, AI is just eating software, and it's going to cause compression in software. And that's going to do two things. One, present an opportunity for us that like to short stocks. I love shorting stocks. And then two, to pick up the pieces of the companies that are really going to benefit from everything going on. Hence, I think Oracle, if it gets smoked here, I'll be chopping at the bit. But it can come in. If you take a look at something like an Oracle, and I don't want to get too into singular stocks because we have so much more to cover, but that's not great. Like, I don't like shooting stars on weeklies. It's not a good look. It's not sexy. So, when you're long something like this, and I've been in this since like 190, since the news, I have to start asking myself, like, hey, how much of a ride am I willing to go for? Am I willing to go for all the way back down to 200? I mean, my answer is no. Save you a bunch of time there on guessing that. But I have to look at this and go, well, what am I doing? And that's where my head is. That's why when we tie it all back, and it's super important to drill into these things. Long term, we look great. And I think you're going to start seeing more IPOs come out. And I think you're going to start seeing way more disruption. As an investor and trader, I love disruption. I love it. But you can't ignore that something's going on. Your job as a trader, and what I just did there, was to explain how you're supposed to investigate what's actually going on. And you do that by tearing apart the sectors and trying to find out what the heck's actually happening. And I think that's what's happening here. You can always put your comments down below. I really appreciate your comments. And what you think, which companies, tell me what companies you think are actually going to get smoked by AI and which ones have no chance of getting smoked. And we can kind of go from there. We can do more on this topic. So I'll be real clear. I have nothing to do with this. I didn't make it, but it's really good. And for people that want new highs, new lows, this gentleman right here, I believe it's gentleman, I'll probably get in trouble in comments on that. And you can see it right here as well. I took off these 99% lines just because I don't need them. They're marked off by this. Is it 99% high or 99% low? And scale it out. So I don't really need them. But I think it's worthwhile if you guys like this kind of stuff, and I would like it. But if I went to this period of time and I just take from 10 to 15 years out, I don't get many signals that I'm getting like I just got. And I just think it's important to just point it out. Usually when you get these kinds of sell signals like you've gotten here on the 16th, you want to pay attention to them and see if you're going to rebound. Is it an extreme rebound area? Yes or no? But when the broad-based buying comes in, you want to know it. And you just got this signal, and I definitely think it's worth paying attention to. So you can see it happen about 2 weeks ago, it looks like. And what it's telling you is that 99% that day was just new highs versus new lows. Drop this to a daily, and when you start to look at this, we're going to bring this down now. But when you start to see this kind of stuff, pay attention to it, because it's telling you that, yeah, I understand that one of the sectors is weak, but overall, a lot of these names that are in the NDX, they're hitting new highs. So why we have a weak sector that's affecting the ADL, which we just walked through why that may be the case. We did. We walked through it. Now, whether you agree or disagree, that's totally fine. Everyone's entitled to their opinion. You're entitled to be wrong. But when you look at this, it's really important to get that, hey, you're still hitting new highs. And those new lows, like if you were doing this, like here's where I get concerned. See how the new lows are here, and what's really cool about this, I like this a lot. Watch if you go here. But wait, there's more. If you go and take out the new highs, and you look at the new lows, and I just do something as simplistic as say, okay, well, here's April. And am I getting, no, I'm getting less. I'm getting less new lows, right? This is irrefutable. This is why I like doing stuff like this. Or am I getting more or less? I'm getting more. I'm getting more new lows. I'm getting less new lows. What's good for the market? Less new lows. And so what I do like about this tool is you could just kind of take it apart that way. Here's the new high list. All right. Am I getting more new highs or less new highs? And then you just you can play with it a little bit and go, well, here, we had the spike, everything's going to be great. Yay, elections. And then let's not take that spike, but let's just take the breadth of what happened before we got liberated. And then from getting, the pause on the liberation, what's happened? Okay, so what's really going on here? Well, the market's getting stronger, period. End of story. It doesn't mean you're not going to have dips and that certain disruption's not going to happen. I love disruption. You can really profit from it. And I think that that's what's happening in software. One sector that could be at risk here could be IGV. And I just got comfortable with the fact that it looked like it was getting ready to break out. But I'm starting to slowly turn here, and I'm much higher. It's not really a trigger yet, but it's certainly getting there with the fact that I'm at the same place and that this high versus this, it's not great. And we know that this is expanded tech software. It's really tech laden. So I'm not really crazy about what I saw on Friday as well. This means that, some of these big names that I really like in software or that are in IGV, that this could come in. And then what that leads me to believe is going, okay, well, what's going on under the hood? And then you start seeing stuff like this. Well, XLC looks like this, but here's the higher high. Because you have to see where are they going with the money? That's what we're trying to figure out. Are they coming back into this, or is this setting up for a big suck salad? This could be setting up for a huge suck salad here, right? You say it. So then the question is well, where's the money going to go? Because you see the divergence here, right? And this is where it gets super interesting to me, because is it going to flow back into the stocks? And the answer is it seems to be flowing into the stocks a little bit, doesn't it? You're setting up here to lift. You have the higher high right here. You're pushing. Semis have been beaten down. When we look at the SOSX divided by IGV, because we always need one of those two to lead and tack, and we look at how that looks, let's get rid of the RSI for a sec. If we were to look at this, well, you might even say that's a breakout. If we put the RSI back, you would even argue that that is one massive mother of a positive divergence. And you say it, but I'll just put it in here for you just in case. And then we'll get rid of this aggravating line, this magnetic thing that drives me crazy. But you see how we're looking here? And then you can see here, and you can see the divergence. So I've got this massive divergence on a relative basis between the SOX and IGV. And this is happening when? Then, I don't know where that came from, but we're just going to roll with it. But what you're seeing here, I think you're seeing a breakout, and you're seeing it into next week, which is ASML and Taiwan Semi's earnings. I'm sure they're not going to be fantastic, right? It must be a coincidence. So ASML is a tough one, man, because you have to go spend $500 million for a piece of equipment. And Samsung just put that on hold because nobody wants to use Samsung in Texas. They all want to use Taiwan Semi. I mean, it just makes sense. Why wouldn't you want to use the best? But what I'm saying here is I think you're setting up for a flip back to the SOX from IGV. And I think that that's where this is heading. And that makes a lot of sense to me because it's all AI driven, and AI does not exist without, the triumvirate. But you need those names. You need the NVIDIAs of the world. I'm not going to spend a lot of time on this. You need NVIDIA, or it doesn't exist. Right? You need AVGO for the connectivity, or it doesn't exist. I've gone over this ad nauseum. I'm not going to waste more time on it. But I do think that this is really important, and I think that that's what we might be seeing. That money might rotate, and it might be time. And that is the sign of a super healthy market. So in other words, you want the NDX to consistently rotate. You might pull back before going higher, and that's not the worst thing either. But understand what we're seeing is really very strong. It's just that I think we're going through rotation, and we're going to speak a little bit more about rotation right now. And one of the areas that I really look at is on the regional bank side, but also I like looking at the XLF. I like trying to see what's going on there. I'm going to take all that off for a second, and we're going to get back into it in a moment. But if we look at KRE, the majority of us are going to look at this and go, we've gone nowhere. You'll remember here, this is where they told us every regional bank was going to go to zero, and then we were able to make doubles off of them. It's a couple of years ago, back in the day, and they keep giving me this magnet. I don't know. Maybe they're telling me something. So I don't use the top of that. I use the body. It's all about the body. So you go to the body there, and then if we did the same thing back here, you just came to the body, and then you just looked at the bodies right here. You go, okay, you're kind of wedged in there, right? And then you have more of a minor one right here from that point on to this one. And so the fan is getting tighter and tighter, which is what I like when I start to see these names. You actually have a mini fan in here that you actually broke out of already. I'm sure you guys already saw this one where you would just kind of connect the body from there and here, and you can already see that break, right? So you have a mini break that probably takes you to the top of this, which gets you to connect up here. And what we're starting to see is that regionals are starting to get a little more attention than what? Than the financials, like the big dogs. All right, we'll get there. But let's take a look at KRE and just overlay a couple things. We're going to get rid of that for a sec. And then I'm just going to drop the Ichimoku cloud in, and just on the weekly basis, just look at how this is going. And what we're seeing here, and I use this on a weekly and a daily basis because it tells me really how things are shaping up. And on a daily, you can see that we came right to it and we lifted and then we just stopped. We flipped, we held, and now we're just grooving, right? So we're doing pretty good there. And then we go and take a look at the weekly and we can see that we're doing something very similar where we popped out of it right here, which is exactly what you want to see. And what we're trying to figure out is what's going on, obviously, with rates, and we're going to get to that with futures, et cetera. And I really want to get to the commodities here in a sec. But what is this really telling us? What is really happening here? And to me, I think that you're rotating into the regional banks. And I'll show you why I feel that way. But let's get rid of that cloud. And I'll show you this private one that I use. And it's just a real simple ribbon, but it's kept me out of harm's way a lot. And really when it flips yellow, it just means, what are you doing? Like if you're long, like what you doing? Don't do that. Wait till it flips green. And then I'll just say, okay. And so here it's flipping green, and then you're staying green even when it dips down. And the ribbon keeps me out of harm's way. The ribbon changes. People think, oh, it's an EMA. It is and it isn't. It changes when it changes based upon the volatility of the VIX. So it's something that I created and I find it really helpful. But anyway, so if I look at this, all right, I'm good. Like things are setting up pretty good here. Then I go and take a look at the XLF. All right, well, this has just been an absolute monster, right? Since we flipped back here. And if I got rid of my super secret cloud and I just dropped this in, how does it look there? Well, that looks fantastic. All right, good. So just so we're clear, and if I overlay this and just throw this in with the SOX, just so you get it, the SOX just flipped on this, and I probably should point that out. You just flipped. You just turned green on the weekly. You want to pay attention to this stuff, and you can see what it looks like here on the daily. But where I'm going with this, before I go off on one of my tangents, is if we take a look at KRE, and then we compare this to the XLF, and looked at how that's shaping up. And then let's just get rid of the cloud for a second and look at this and saying, are we seeing any level of development? And again, I think you are. And I just want to point some of this stuff out because it's super important. If you took a look at this May 23rd from regionals to financials, and these are multi-year charts, guys. So, it's not like, oh, I better go run out and get involved on, Monday morning. We're getting there to some of those names. But what we're seeing here is we're seeing it really very clearly that you have your undercut here and that the RSI didn't get there. And you're setting up for this to continue. In other words, I'm of the belief that regionals are going to start outperforming based upon the rate cuts that are coming. Now, whether they come under Powell or they don't come under Powell, it doesn't really matter. We're in July. By the time in 2 weeks, you're going to be in August, and then you're going to hit May, 6 to 9 months. Like people are going to start buying. The market's a discounting mechanism. Whoever gets appointed in May, and it's not going to be Powell, they're going to start cutting rates, and they're going to be really aggressive. They're certainly going to say that they're going to be aggressive in cutting rates. That's for sure if they want the job. So understand that, and that's the way that it is. So I do think, and regionals do benefit more than financials. And I think we're going to start rotating into that. I think you already started to see that with these moves like JP Morgan just kind of dropping, retesting. I'm not suggesting that these banks like the Goldmans of the world are going to fall apart. I own these. I see no reason to do anything with them. But what I do see happening is some of the things that we did in the community where we bought like DPST, we're up $11 there. We haven't had to worry about it at all. Like it really hasn't been an issue. You start seeing nail lift because they understand that they're going to, cut rates. But where does this all really lead us? Well, it leads us to start looking at regionals. It leads us to start finding the best regional banks. One of the reasons why I think Sophie's moving the way that it is, despite that people love it from a retail perspective, I tend to believe that it's moving because people understand that it's really a regional bank. Now you can see MTB, and it's probably one of the best, but look at some of these names like Key, MTB. They're all shaping up. The best in class is FCNCA, and that's obviously had a monster move. You're up 300 points from that 1800 level, and it's just ripping. I would argue that if you look at some of these things like FCNCA, let's just take a look at this, and look at JP Morgan, you just look for best in class, what do you see happening? Well, since about June 13th, it's outperforming. And then you would say, well, we'll just take this move from July on. How much are you outperforming? Okay, so if you bought FCNA and you shorted JP Morgan, you're up 11% on the trade. So your outperforming is there. Now, does that continue or not? No one really knows, but I think it's going to when they start cutting rates. Remember, regional banks can turn their businesses around a lot faster. Think of a speedboat versus a cruise ship. That's really what I'm getting at. And when we get to the IWM, in front of us is a plethora of moving averages. And what I do is I'll use them people use them and they call them ribbons. And it's helpful because it just kind of shows you where we're at and how things are playing out. So I get rid of the actual price and then you just look at the ribbons. So like if somebody looked at the ribbons here and like, oh, this is really where I should buy because all the ribbons here on the weeklies are turning and we all hit in here. And hindsight again is a beautiful thing. But if you're seeing this at the time, you don't know what's going to happen, right? So you would need that to kind of play itself out a little bit and then kind of go from there. And I'm not going to leave this on like this, but you could see where I'm going with this. So you don't know that that's what you're going to get, right? What our job is to look at where you are and then make a decision on how that's going to play out. So for me, if I see something hit a level and then turn, and they all start going in a direction. See something hit a level, and they turn, and all start going in the same direction. See something hit a level and turn, and all go in the same direction. I have to assume, I said it 3 times on purpose, that I may have the potential to do something like I've done in the past. It's very clear that when you get down to this major line or near it, that becomes an area of interest. Now, for those that just want to know, they're all lined right here. And you can see 10, 20, 30, 40, 50, 200, 300, all the way across. And so what that does is that ribbon system allows me to look at this on a much longer time frame and get a sense of that. If you drop the price back in, which I think I just do right here, hold on one sec, drop that in, there you go. And what that's doing is, yeah, that's helping, but I don't really need it. What I want to know is, are these ribbons turning again? And the answer is, yeah, they are. Now, they're slow because it's weekly and, 10 through 300, it's going to take time. But these undercuts here showed huge rallies in small caps. And I think that that's where we're heading. I think we're heading into some of that kind of movement. Some of the others that I think are super important to go over is what's going on with Bitcoin. It's very hard to have a risk on market and see what's happening with Bitcoin and think that we're just going to completely and utterly roll over. I really just don't see it that way. A matter of fact, if I just went to a bear chart here, meaning just plain, and looked at the cup, the handle, and I've been going over this with people for a month and just stating, if you've been watching these videos, you just riding the lightning up here. I mean, whenever you stay in an area and you can't back off of it, all you're doing is eating supply. Usually the person or people that are eating supply win. And that's exactly what's happened here. So pardon me, but that's exactly what's happened here. And it's certainly something that I think continues. Now, what you tend to do with these things is you measure the cup, and you measure the cup on a percentage basis. See, they hit me again with that magnet. And what I mean by that is you just drop it down, drop it like it's hot. You come here and you get 32%. And then what you would do from your line of the cup is you come up 32%. and that's going to give you an estimate. I think it's like 145 is what I came up with. Something like that is the count of that cup and handle move. And I think that's pretty realistic. It's very difficult for me to tell you that the market's probably going to head down as this continues to grind higher. I really don't see it that way. And when you look at this in relation to the dollar, it's kind of staggering. But before we even get there, I do think we should look at something of just look at the weekly. I mean, look how perfect that weekly is. It could be in a textbook. I mean, that could literally be in a textbook. Here you are, here's the cup, I'm a little teapot, right? And then boom, there's the breakout. So for people looking at this and going, oh, I missed it. It's week one, man. It's week one out of the cup and handle. So you probably didn't miss anything. And I do think, and we're not going to get into this for time's sake, but if you're going to do stable coins, and while you're in stable coins, you're going to want to park that money somewhere. You might park it in Bitcoin. And I think that creates demand for Bitcoin. And I don't think people are connecting those dots just yet. I do think it's helpful to look at Bitcoin in relationship to the dollar. The chart's going to look similar, but not exact. And you can see obviously your peaks when it outperformed. But yeah, you're absolutely crushing the dollar. DXY is how I have it set up there. You could do it through UUP. It doesn't really matter to me. But if I was to look at this, yeah, I'm absolutely crushing it. Like it's not even a question of if people should buy Bitcoin with their dollar or not. It's just versus this obviously is through other currencies as well, but you're absolutely destroying it. So does it make sense for people to buy Bitcoin now as a dollar hedge? And it's unequivocally right now, the answer is yes. And as adoption continues, I would expect this to, continue. And that's exactly what we're starting to see here, that push. Look at it on the weekly. And to me, it's even more glaring if you just go back to when you started versus where you are if you put your dollars into Bitcoin. I do think that this becomes more mainstream even now than it is, where people look at it and even assimilation into, I need some Bitcoin because that hedges out my dollar. I do feel that way. And I do think that that's where this is going. And I do think that other countries are going to do the same thing. It's becoming very clear, and I actually think stablecoins could really disrupt this whole thing. Actually make Bitcoin go higher a lot faster than people thinking. I can do more on that in another video if there's an interest. Just let me know below. All right, so what about commodity prices? And aren't we worried about commodities because commodities are going higher, and how are you going to cut rates with commodities? And this is a really valid point. So, and I'll just show you, this is kind of what it looks like. So what I tend to do with it is just drop this line. I think it's a lot easier. And this shows everything from nickel to palladium to lumber. And what I tend to do in these areas is, instead of just buying commodities, what I like to do is find a commodity that's going to do well, whether or not we go up or down with commodities. And how do you do that? Well, for me, it's always lumber. Lumber works pretty well because if commodity prices go higher, lumber will go higher. If commodity prices drop, that's probably because you're going to hit an environment where they're going to cut rates, and then lumber will go higher because demand will increase. It's either going to go higher for price or supply, right, or demand, one or the other. And so that's usually what I tend to do. It has worked pretty well throughout the years, and I'll just walk you through that very, very quickly. So this LPX, I bought in the community. I put an alert out on this a while ago. And we're doing quite well with it. It broke out and then you went up to 97, and it'll just keep grinding over time, in my opinion. But there's other ones too. There's a couple big lumber companies actually out of Canada that some people are trading and doing quite well with. That's really where this tends to head. That's where my mind goes with it. I do look at the fact that, that home builders are moving the way that they are. I do look at the fact that biotech's moving the way that it is, and that's telling you something, hands down. It's telling you that people think that the rate cuts are coming more than they're not, right? Or they wouldn't be buying the XBI. But you have to tie this all back together. And what I mean by that is you have to look at what's going on with commodity prices in regards to the market itself. So how are commodity prices moving in regards to the stock market? And that's when I get something like this, where I look at commodity prices, and this is just Thomson Reuters CRB, and I look at this in comparison to the SPX. So am I really worried about commodity prices in regards to this? No. When did I have to really worry about this? When we find something that we're supposed to be worried about, because last time it did something that told us that we should have been worried about it, you have to look at it in the context of how that happened. So I hope that makes sense. You might want to replay that part. What you're getting here is, this happened in January and December and rates were here. Well, where were we in regards to the S&P when this happened? Oh, is that what's happening now? Well, no. Okay, then it's not the same thing. See, the same relative area that you were has absolutely nothing to do if it's acting completely different, right? It just doesn't. So when you go and take a look at something like that, and I'll just take this out for a sec, and we'll just drop it back, people are going to look at this and go, we're at these levels that we were at, yada, yada, yada back here and therefore X, Y, and Z. And then you're like, well, how are we doing relative to that? And then you just look at the relative of it and go, well, it's a completely different scenario. That's the difference in the person that's going to make it using these kinds of tools. If you can't look at the tool on a relative basis, you're going to have a really tough time. So what should you take from all this today? There's a couple things that I think you should take. First and foremost, I think you need to start looking at sectors that you're not looking at. I think you need to start looking at like XBI again. I think you need to start looking at KRE again. And you want to get into these and start looking at them for leaders. And we've had people that have been buying, try not to laugh when I say it, but they've been buying like CRISPR for a long period of time. We have one woman in the room that's absolutely obsessed with the stock, but she's doing quite well with it, absolutely killed it. And I think when you look at this kind of stuff, you want to be ahead of it, not behind it. What I would say to you with that is going into this week, we can look at the Teslas of the world and say, oh, Elon tweeted, Elon's going to do this and this stock's going to do that. And yeah, great, they're trades. But what are the themes? Well, I think one of the big themes is semis. And I think that you have to go and say, how does AI disrupt semiconductors? And I don't know how it does. I think you just need more of them right now. It's the same thing when we start saying with power and looking at like the power names. We wanted to buy this at 500 and everybody was like freaking out about it. Now you're 40 points higher. Like this is really what you're seeing with this kind of stuff. Is it VRT that you have to look at? Do you have to go look at the power names again? Here's VST and it continues to grind higher. Like AI is not going to disrupt power. You're just going to need more of it. Some names are going to move better than others, right? But you're not going to disrupt the power space. You might bounce all over the place and it might be a wild, wild ride, as you can see here with like the nuclear space. You're just going to need more power. Like that's not going to go away. You're just going to need more computing, right? So that's semis. But can it disrupt software? Yeah, it can. It is. What I would suggest that you might want to just wrap your noodle around this week is listen to ASML's conference call. Not so much from an earnings perspective or playing it, but what do they talk about? What are the next levels for demand? When do they see these next machines coming out? Remember, these machines, when they're delivered, they go on a tractor trailer. It's $500 million. So it's a long, long cycle to get one of these, but you really can't create chips without them. So you want to listen to what they have to say. For sure. And of course, the second thing you really should be paying attention to this week from any standpoint at all is Taiwan Semi. Now, Taiwan Semi on earnings here, you never know what you're going to get. You don't know if you're going to get these blockbusters or if it's all baked in, it's going to come down. It doesn't really matter from trading the stock perspective. What you're trying to do is just gain the knowledge and saying, do they see any kind of slowdown or are they just talking about ramping up? Because if they're talking about ramping up again, that's really what you want to pay attention to. That's it.